Next-gen NFT verticals as vital components in the evolution of crypto markets. It's always nice to have many, many voices on the stage at once.
More than in the room.
Well, you know, don't forget, there's millions and millions and millions of people who are going to watch your talk in the future through that camera. So it's for now, it's for later. You have our attention. We look forward to hearing what you have to share.
Can I have the mic?
Yes, you can.
Good morning, everyone. Thank you for being here. I mean, it's pretty early, and if you went to the 10 simultaneous events that happened last night, I appreciate it even more. I'm Ioana Surpateanu. I have a very eclectic crypto degen role, but today I'll be wearing my Crypto UK board member hat or avatar. Crypto UK is the largest crypto-focused trade association in the UK, and the focus and the design primitives behind that is that we want to educate the regulators and policymakers and ensure that they don't intervene with unnecessary crypto regulation. I don't want to waste too much time, so I'll hand it over to my fellow panelists to introduce themselves and tell you what they do, and then we'll take it from there. Alan, over to you.
Hey everyone, I'm Alan King. I run A Kings. We're a streetwear brand based out of New York. We're most known for our J-shaped jeans, which fit anybody from 4'11 to 7'1". We've been in the space for the past 2 years. We were one of the first brands to do physical redeemables, and we got very lucky with a series of collaborations along the way since then.
Hey, good morning, everyone. I'm KP. I have a very traditional cyber crypto infrastructure background, but in my spare time, I've created Tantamount Labs, which has open source tooling for artists and creators to be able to digitally sign their work on chain, and that also has product and tooling applicable to linking physical and digital.
Hi, everybody. I'm Mike DeNunzio. I'm the founder of Pebble Ventures. We are a strategic advisory firm that helps lifestyle brands bridge Web 2 to Web 3. So we work with large corporate brands here, mostly in the United States, and we're helping them with their enterprise strategies as well as at the brand level go-to-market strategies.
Hi, guys. Good morning. We're gonna wake everybody up a little bit, right? Hey, what's up, guys? Hi, I'm Freddy from Singapore. I have Hungry Human Labs. I develop Web3 projects focusing on the creative side and phygital solutions. Secondly, I have a project called Hungry Hamster Club. There's an NFT project, and it's a physical and digital collectible series. I think we will be one of the first, if not the first, NFT brand to go into a serious IP of a toy collection that we will keep building. Yeah, thank you.
Awesome. As you see in the title of our panel, we're going to be discussing NFTs from the filter of the wider crypto market parameters. If we look at the market currently, we live in a very convoluted environment. We have a high rate environment. We have people taking their deposits out of banks, having been educated by crypto to access and understand finance in a new way. People are removing deposits out of banks. Why? Because there's no yield there. And they're moving it into risk-free assets like T-bills and money market funds. So we have that on one side. Like people who have been, let's just say, aggressively educated via DeFi yield farming are now applying that same model in TradFi, which is a very interesting thing to see. On the crypto side, we've had the successful Shapella, Shanghai, and Capella upgrades, and now Ethereum has transitioned into the first major upgrade following the merge and moving into a more scalable environment on the execution and settlement layer. That's a positive. But overall, the market is in a very hard to predict operating environment. How does that reflect on the NFT side? What are you bullish and bearish about? What do you foresee as the near future problems to solve in the NFT space? And let's take it like that, like we did in the beginning. Alan, over to you.
Yeah, so on our side, all we're really doing is we're applying NFTs as just a digital, a way to kind of pre-sell clothing for our collections, and we are doing that on the distribution side of wholesale because there's a new wave of buyers that are kind of younger and understand the market, and they're already buying from mock-ups traditionally from us, so now they're willing to buy a digital item. And one thing we've been kind of brainstorming is more maybe pre-selling to the actual customer as long and maybe they can share some upside of the design when we sell it to the wholesale. Yeah.
But I mean, I'll come to you in a second. But I mean, there have been these issues that have been identified around NFTs, like in terms of storage. Where do you store the NFT, in a distributed system or not distributed system? And then you're contingent, or you have that third-party platform liability risk. There's the issue with NFT securities, and KP, I'll come over. I'll let you elaborate on that. There are issues with NFT fractionalization and what that means from a regulatory standpoint. Can you pinpoint to a specific issue that you're concerned with or that you would like to see solved, or you're just overly bullish in the space?
I mean, I don't think that we're overly bullish on the idea of, for example, fashion NFTs being something speculated on. I think it should be just a consumer product that's bought if you like it. Mm-hmm. And I feel like a lot of the fashion volume right now that I'm starting to see is really just speculated from Southeast Asia and like other countries, and they're buying like $1 to $5 NFTs, and it's just not really for the actual designs. It's more for the potential to make it like $50 or something. So I'm just overall, I'm not particularly bullish on fashion NFTs right now.
KP, any security related elements you want to bring into the conversation?
Yeah, I think I'll preface this with saying like I've generally been bullish on crypto and NFTs and blockchain since 2015, 2016. So, fully understand what I'm saying is not in total criticism of like the ecosystem and whatnot or anyone who's involved in it. But I think we do have like trust issues. And I think, your trust layer needs a trust layer. And I think there's a lot of room for opportunity in the ability to be able to verify NFTs on chain. I think trying to link social profiles and emails into like bringing Web 2 into Web 3, I'm really not a fan of, and I would not like recommend those things. I think there's ways to do this in like an on-chain and crypto native way, and I think as you bridge over into fashion, I think the integrity and verifiability of your NFTs, and if you are linking physical goods to a digital representation of that, I think becomes even more important, or you're going to end up with like there are a lot of good things happening, and there's so many creative people. I'm sitting with 3 of them that are doing amazing things, and I think that infrastructure needs to be there to be able to support the ecosystems that they're trying to build. So that would be, I think, where I think we should focus more time and energy on. I think if you look at OpenSea, I think, and this is probably true for a lot of marketplaces, I think majority of their royalty fees get paid out to like fake collections and things like that. And I think that just does a disservice to everyone who's kind of like pioneering NFTs or coming up with really great things.
So 2 things. Sorry, guys, but I have to comment. It's interesting, right? You mentioned bringing Web 2 into Web 3. I fully second your assertions because I'm on the same side. However, if you look, for instance, what is currently happening, you see a lot of user aggregation on a Web 2 platform, and then the monetization layer moves into the Web 3 world. Do you think this is also linked or could be solved by solving the security and trust issues? And then you'll have the Web 3 environments as much more as being perceived as safer for the user to become comfortable operating exclusively in it.
Yeah, I definitely agree with you there. I think when you think of like the Web 2 security issues and the way that you would authenticate into Twitter or Instagram, like it's very easy to hack those. It's very easy to break them. We see that happen all the time, especially within NFT communities. And I think you bring those same problems into Web 3 when you try to integrate it too much. But I think if you're actually staying true to like the principles of crypto and how the protocols work, I think you have a better chance from a security perspective of like kind of protecting everything that people are building on chain.
Agreed. Michael, what are you bullish about? And before the panel, we had a conversation about onboarding masses into Web3. I'm on the more stringent education pushing side. So if you want to incorporate that as well, please go ahead.
Yeah, we had a pretty healthy conversation about this earlier, but I think we're coming at it maybe just, we're both actually on the same page, but coming at it from a little bit different perspective. So I see, I'm actually quite bullish on the concept of NFTs, blockchain, Web3 as engagement and empowerment and enablement tools for consumers. And when I was helping brands get onto the internet a long time ago, so I'm going to date myself a little bit, a lot of the things that you were just talking about were true then. It was very, very difficult to get somebody to put their credit card online to purchase a product. It was a new user behavior, something that they weren't quite comfortable doing. The technology wasn't really that smooth to make the whole process happen. And so it created just a lot of, I don't know if it was mistrust, but just lack of confidence. And I think one of the biggest things that our industry needs to do this year in order to get people to learn and understand is, at the very beginning, we have to make that access point a lot easier. So from a UI, UX standpoint, I've been involved and purchased many NFTs, and oftentimes it's incredible how many times the transactions fail. And if we're looking to even get the younger generations or other generations to participate in this world, transactions cannot fail. Because transactions don't typically fail in e-commerce, right? We do things so simply. We're ordering coffee at Starbucks while we're, purchasing clothes online. That to me is kind of the number one issue for our industry this year, is to really make sure that front point where they're making an initial transaction, going through an initial process, is super seamless.
Freddy, you seem a little bit melancholic.
I am thinking, I am processing what everybody is talking about, man. It's really cool. I think this is a really, really simple question and deep topic, actually. Just 3 weeks ago, I was in Singapore. I'm Singaporean. I'm in Singapore. I gathered as many founders as I could, and I sat down with each and every one of them, and I asked this simple question: how are you doing? That's it. How are you doing? It's this one simple question. One of them even broke down in tears, man. Yeah.
Please don't do that.
No, not me. No, I'm just very motivated at the same time. Now suddenly remember, a bit motivational. No, not motivational. What was it? Yes. It just hits me. Emotional. There you go. Emotional. These a lot of projects that launched, they can do well and they get stagnant. The projects that did well, a lot of them are going down. A lot of negative sentiments. I was mentioning to KP just now. A lot of big projects that seem to do well in the before, stagnant, and those are the ones that, if do well, those are the ones that do well better at this point of time. And there's a lot of misinformation and mistrust in the world, and I am trying to focus on educating with what I can. A few things that I tried to do is to work with the government and work with different agencies, government agencies, to tell them a bit more. And going back to what is bullish, yes, I feel like the technology is behind it. I think the verification, authentication, adoption for mass users, these kind of tools that laymen can, creators and founders can just use it as well. Because right now, a lot of projects, they don't have the technical know-how, or they're just not as savvy as a lot of people, which is the majority of the Web3 project populace, actually. So you gotta be making stuff that's accessible and easy for them to use.
It's interesting, right? Because if I compile all of your answers, what I get my summary is basically two things. I do agree with you, Michael, but you mentioned confidence of the user to feel comfortable operating in the space. I think, personally, confidence comes from access to a lot of information. So unless you feel you are sufficiently prepared to make a decision be it right or wrong, but then you can only blame yourself as opposed to blaming other entities that you delegate responsibility to. So I think confidence is supported by access to and a pretty solid level of education about the space. I'm not saying that people should know about liquid staking derivatives. I keep on bringing that up because I'm actually bullish on that. I want institutions to participate in ETH staking. So now with the Chapella update, people have seen, entities have seen that you can unstake your ETH, which was a not known element. And so I'm hoping that we will have a lot of insti capital infusion into ETH staking and into DeFi more generically, right? So I go back to my point. I agree with everything that you said, but I do feel like we need to enable access to more education and allow people to operate on a solid knowledge base when it comes to crypto more generically. And Freddy, I actually agree. I'm so happy that you brought this forward. I wasn't anticipating it. I feel that because of the bull market we had last year, and the year before, there's almost this peer pressure when it comes to projects that they're in Web 2, most of them, and that they need to create a Web 3 product. No, they do not. It's not, Web 3 is not about, brand enablement. Yes, there is, obviously, brands have mostly integrated NFTs, since this is a topic of our conversation, for a marketing exercise niche or from a marketing perspective. But I think, not all Web 2 platforms need to be in Web 3. Those that do need to have a clear vision when it comes to products. So I'm very happy you brought that forward.
This one has two very strong point of views, two perspectives, right? One is what I like to do is my first meeting with any clients, any brands, any IPs, my first meeting is always why you shouldn't be in Web3. That is my first meeting. Once we clear that and they still understand why they want, then we work on the project. All right, and then it comes to the debate where then if you don't ask the brands and the big companies to come in, then where's the adoptability and all that, right? That there has to be a balance, I guess, that people need to understand why they come into Web3. A lot of people just come with an NFT thing and say, oh, we're going to do some membership. Then you just stick with your freaking card. My Singlish coming up. Just stick with your card, membership card. There's no need for you for Web3 thing. Stick with your emails and EDMs, right? So yeah, stuff like that.
Agreed. Alan, sorry, go ahead, Kate.
No, I was just going to agree with you guys quickly. I think we've seen a lot of that in the space where you see all these big brands jumping into Web3, doing different launches and whatnot, and they haven't, truthfully, they just haven't gone well because I think to Freddy's point, they don't understand what they're doing or why.
Correct. There's the peer pressure, right?
Yeah. It's just
some sort of pressure to operate in this space.
Exactly.
Alan.
And also conversion is hard. I always tell to them, what's the conversion rate is less than 0.1%. Why do they want to go into Web3 when you're going to a totally different audience?
I think that's kind of a bull market mentality where, you saw that there are swift returns on investment and you felt the need that you wanted to be integral to the space, one way or the other. I think brands...
Can I defend that a little bit?
Yeah, but I just want, I just want to give Alan a chance because he works with, the fashion industry. So what do you feel... If you were to apply our mental model in terms of, do you feel that there's a pressure for traditional fashion brands to operate in Web3, even if they do not understand the ethos of it?
I think there's not necessarily a pressure for traditional brands, but it's more seen as like a marketing play at the moment. So there's a lot of, if you see like the bigger partnerships in the space, there's no repeat seasons, right? Like they might do a program with the Central Land, but are they doing that every single year? Are they, doing other things in a space, or is it just a one-off collection? And so I think a lot of it is just PR noise right now. I think the more interesting thing that I am seeing is kind of the idea of building a brand or a following in the space, and I'm seeing some projects like BBRC I'm very bullish on, and it's a friend of mine's in Singapore as well, and they're doing some cool things, and they come from 30 years in fashion, but now they're one of the market leaders in the space as the ETH project for fashion.
I'll hand it over to you, Michael, but it just comes to support my theory about understanding the technicalities of the space as well. Because you launch, like you say, you launch a collection, the NFT collection. You do something in Decentraland, the Metaverse Fashion Week, which we can debate. I think it was a disaster. But then the brands do not have the capacity to move beyond that point. They do not understand the evolution of these new instruments. Like, what is next for NFT? Yeah, they say NFT utility. What does that mean? Community building. Yes, you have that in Web 2 as well. Where do you go from here? And to be able to strategize around that, I think you need to have, at least if not the brands themselves, like bringing experts, bringing developers, bringing the people who build the infrastructure for the space, for them to tell you what you can or probably should not be doing next. And you wanted to intervene before, so please go ahead.
No, I think maybe you're not giving the brands enough credit for what they're currently doing. Brands are in the business of connecting with consumers. As consumer behavior shifts to these new technologies and these new platforms, these new way of doing things, brands are starting to learn how to engage with those consumers. So a lot of the projects that are out there may not be a quick follow-on or something of that nature, because brands are at the point where they're learning how to engage and enable and transact with consumers in these environments. I think this year you're going to see a lot more brands who are now understanding, because they've put their toes in the water, and now they're really starting to understand, what does this mean for me, for my business, for my brand? And we work with a lot of brands, as do many other consultancies, and we bring in our tech partners, we bring in developers, we bring in all of those people into the conversations to understand. So I just don't know that there's not as much of that going on, because I see it, my other consulting friends see it. They may not, we may not, or they may not, or all of us may not fully understand every little detail, but we are starting to learn what this means, in particular from a consumer standpoint. Do they want it? Do they care? Does it actually change our business? Utility, all of these issues, they're being talked about constantly at the brand level.
Yeah, I mean, you have to defend what you do. I completely get it, and the brands, because they're your clients. I'll give you a counter example. I mean, F1, of which I happen to be a big fan of, is one of the most, I don't know, capital flowing type of environments. All of their Web3 crypto NFT partnerships were a failure. Why? Because they approached it from the traditional type of partnership angle. They threw a lot of money at it. It didn't work out at all, okay? And there you have an even more complex story. I would have expected, because F1 is a technically driven sport, right? So I would have expected a deeper level of understanding or appreciation of the trying to figure out what the granularities of Web3 are, but it didn't happen, okay? So I agree and disagree with you. Well, I guess we will see. I was counting on 3 questions. We're discussing, we're still discussing the first one. Quickly, we have 30 seconds. What, well, we needed 1 more hour. What do you expect the space to look like in 6 months? Very, very swiftly, given the trends that we focus on in 2023, which are the return of the real-world assets and tokenization, utilizing real-world assets as collateral in DeFi, the re-empowerment of DAOs, stable coins as well, new forms of stable coins, etc. So what do you expect to see from an NFT perspective? Alan.
I think there's still going to be a consolidation that's still happening, especially for stronger projects. And there's also going to be a fall off of a lot of projects that are kind of out of money, or basically didn't do their projections properly.
Yeah, I think just quickly, I think the market is constantly changing. I think those things are going to drive what we're seeing in different verticals for that. I think what I would like to see is, kind of what you were talking about earlier, is like more education, more like developers and engineers in the space that can help kind of, bring more ideas to life. And then, I'm a big fan of DAOs. I think DAOs are ideas are DAOs. I think they're interchangeable. So I think the more community driven and governed projects we can have, I think the better.